Well, good afternoon or good morning, depending on what part of Australia you're in. Welcome to day 5 of the IMAP InvestTech conference. My name's Peter Warren. If you've been with us all week, you know who I am. But if you're just joining us today for the first time, I'm the MC for this conference. My day job is also as Joint Managing Director for Finura Group. It's great to be with you. We're on the final furlong of this conference, and we've had a really diverse range of excellent presentations this week, and a big thank you to the audience that have stuck with us the whole week and participated in such an excellent way from a Q&A perspective. We're going to round out this week with 2 really interesting presentations, which I think are a great note to finish on this conference. So we'll be hearing from Nucleus Wealth, FinClear, and at the end of the session, to close things off, myself and Toby Potter will be sort of spending a little bit of time having an informal chat, let's call it, to sort of distill some of the key themes and observations that we made from this week, and perhaps some things that we'll be talking about next year. Just a bit of Q&A housekeeping. So if you haven't used Zoom before, this is the best way to ask a question. Just use the Q&A tab. We'll moderate those questions and we'll pass them through the presenters during the current Q&A session. So thanks for that. Just a other bit of housekeeping is if you do want to get CPD points this session, you do need to stick with us for the full hour. So please stay to the end, and that'll make sure you get CPD certificates sent to you. And just finally, a bit of a further promotion for IMAP. Lots of content coming your way still for this year. So I think this will be an excellent few sessions. So, a special session on new technologies and disruption coming up for IMAP next week. So please check that out. It's my great pleasure to welcome Shelley George, who's the Head of Operations for Nucleus Wealth. Nucleus were actually the 2021 Innovation Award winner for IMAP, so a wonderful opportunity to hear from them. Shelley's going to be talking about their Proton technology and how they've built that to actually democratise the customisation of portfolio solutions and wealth management. So I will hand to you, Shelley. Welcome.
Thanks, Peter. And thanks to IMAC for having me, and for the award that we won earlier this year. It was a great honour to receive that. So let me start by sharing my screen. Okay, so I'd like to start today's session in the spirit of reconciliation and acknowledge the traditional custodians of country throughout Australia and their connections to the land, sea and community. I pay my respects to their elders past and present, and extend that respect to all Aboriginal and Torres Strait Islander peoples today. So today, the purpose of today really is to demonstrate the Proton software that we've built at Nucleus Wealth, but not just the software. I think it is a really great tool that advisors can use within their practice, within their toolkit in certain circumstances. So I'm really going to try today to focus on some of the ways in which you can use it. In order to do that, though, I'm going to start off with a brief introduction of Nucleus Wealth to give a bit of context, and then we'll get into a demonstration of the system itself. Okay, so Nucleus Wealth. We were started late 2016 by Damien Klassen and Tim Fuller. Damien had been working in research, buy side and sell side, for quite a number of years. And over the entire period, his experience with friends and families, every time he was at a new place was, can we invest there? Is this the place to invest there? But they were typically, quite large brokers or buy side institutions where really they were designed to be servicing either high net wealth or institutional investors. And then on the other side, Tim Fuller, with his experience in advice, was looking at the amount of administration that he was doing as an advisor, thinking about how much he enjoyed really the client-facing aspect of it, not so much the administration, seeing the amount of regulation to come and the likelihood that that administration would increase, and really thinking there must be a way that technology can help to solve this problem. So together they started Nucleus Wealth, and it was really with this purpose that they could build something that would allow them to offer, the sort of personalization that institutional and high net worth investors but at a level at which everyone really could access it. And so in order to do that, they had to build Proton. And, it started back then, and the building process continues to this day. Just this year, we have done a system upgrade where we've rewritten all the code to increase the functionality of it. So it's really an evolving piece of software or tool. Okay, so when I think about Nucleus Wealth, I think unsurprisingly, given where our founders came from, I think about it really in terms of two parts, and that's the investment management side and the financial or investment advice side. So starting with investment management, we managed both active and passive models. We managed them through separately managed accounts, which is on-prem at the moment. But one of the benefits of the way the system has been built is that it's all done through APIs, which means that it can talk to any system that also communicates in APIs. And certainly we are ready to get on other platforms as and when it's needed, and currently even looking at the potential of offering some stuff on interactive brokers. So on the actively managed side, we have the multi-asset portfolios that are tactically managed, and they are designed across the risk and income spectrum. And they're specifically, these three models are designed to be blended. The equity ones, pure equity portfolios, large caps, MSCI Indices World or Australia. And then the passive ones, which we have just introduced this year. We've got Australian equity, international equity, and the government bond ladder. And again, because they're in separately managed accounts, it means the individual client owns all of the securities themselves. And that's where the real power of this offering is the technology with the separately managed accounts combines to allow that personalization. So I will talk about that briefly, but just quickly to close off the investment management side of things, the actively managed portfolios are managed with a philosophy of high quality assets at reasonable prices will provide the best investment outcomes for investors. So obviously not a new philosophy there, but I think at Nucleus Wealth, what really forms the core of how we interpret this philosophy is this idea that the studies show that when you focus on these type of assets, you're going to, over the long run, see better returns, but also you can have a smoother ride there. And at Nucleus Wealth, we really focus on that smoother ride there, because the name actually comes really from this idea that we're offering investments that are designed to be the core of investors or clients' portfolios. So the idea is you can be in tactical growth potentially for a portion of the your investments, and then around that you can personalize it to yourselves. So you can personalize it within your Nucleus Wealth investment. More on that in a minute. And then as well, you can add assets around that are appropriate to you. So your Bitcoins, gold, real estate, physical real estate, that sort of thing. So obviously, if that's what we are trying to do, are we actually achieving it? What do the stats say? So far, yes. You can see the risk metrics for one of our flagships here, the tactical growth. We are really happy and really proud of those risk metrics, that we have significantly less risk than the average market fund, and happy with the performance that's gone along with that as well. But moving on, more importantly, how can you personalize these investments and how can you use that for your clients? So one of the main ways at Nucleus Wealth that we do the personalization is through screening process, which we're able to apply on a client-by-client basis as a result of the fact that they have their own separately managed accounts and they hold their own assets, they're not pooled. So what I'm showing on the screen is on our portal, which I'll demonstrate to you in a minute. You have our ethical overlay screen. So when a client is onboarding themselves, they are able to come to this screen and exclude whatever it is that they feel they don't want to agree with. I'll leave it at that. We'll talk about that a bit more when I go through the demonstration. Then looking quickly at the other side of Nucleus Wealth, the investment advice, we provide advice through our digital portal, and that's part of Proton. We do provide statements of advice or letters of engagement, depending on whether clients choose to do the risk profile or self-direct themselves into the models. And you know, what's really exciting about this is its ability to be customized. So we have a number of partners at the moment, financial advice firms that have basically built their own statements of advice. And in some cases, they've built their own risk profile to then feed into that statement of advice. Okay, so I've spoken a lot about Proton, but I probably haven't really defined what it is yet. Really, I think of it as the technology systems that underpin what Nucleus Wealth does and everything that we do to bring this solution to clients. So you've got your onboarding, the advice. Obviously, the account administration is really important. If you have a significant number of accounts, you need to be monitoring them all to make sure they're in the right investments, they're doing the right trading, you know, withdrawals or you know, deposits are being processed correctly. And then, of course, our investment research that underlies the active models is all done in-house. So that actually also forms part of Proton. Okay, I've spoken a lot about it. So let's get into the demonstration. Quickly here, I just wanted to talk about the security of it. So we use multi-factor authentication through Auth0, and in the hope of having a smoother demonstration, I have already logged in, but I thought I'd just show you. So there's emails that when the client signs up that they have to accept, and then the SMS there if they want, when they want to get into their account, but of course they can remember it. Okay. So I'm going to get into the portal now, which is one of the parts of Proton. If anyone is interested, oh, well, that's great. They can go to the Nucleus Wealth website and sign up for themselves and just get in and have a look around. Okay, so where this has taken me is the administration setting, but I'm just going to jump into the onboarding to do the demonstration of the onboarding portal for you, because I think that's what's a really exciting tool that you can potentially use in your practice. So it can be white labeled with all your own branding and coloring, and there's also the ability to do quite a significant amount of customization in here as well, if that's something that interests you. So today I'm going to create a new investment account for this process. So one of the strengths of the platform that we're on at the moment is that we're able to offer a significant number of account types. We can do super, and we can do that through SMSFs or personal super. And outside of super, quite a number of account types that you can use there. I'm going to do individual for the demonstration. Okay. So this is where we do our advice triage, which is for the client or prospect to decide which path they would like to take. So we've got limited advice, the risk profile, the self-directed, I mentioned that before. They can direct themselves into whichever models they would like. And we've also got full advice, because we can only offer limited investment advice at Nucleus Wealth. So, but of course, sometimes we have clients come through and they need more than just advice about their investment in Nucleus Wealth. And so that's where the full advice comes in. It'll take them through the risk profile and generate them a statement of advice. But what we'll then do is reach out to the client and just decipher what their needs are around advice and put them in touch with a couple of advisors to then have a chat to about their further advice needs. So that gets done outside of Nucleus Wealth. What we see with our partners when they're using this is that either they might not have a full advice option, or the full advice might actually lead the client to create a booking with an advisor at the practice to get their advice needs met. So in today's demonstration, I'm going to quickly just go through the limited advice path, and I will go through the questions quite quickly. But again, if you want to have a look, feel free to create a login in the portal and just have a look around. There's no problems with that at all. And again, the main thing is, if this is a tool that you think potentially you could use in your practice, you are able to customize this questionnaire and then how it would map. One thing I will highlight that we've done is we have a number of questions that offer an option of don't know. And we think that's a really important part of the process to ascertain the level of financial understanding that the person has. And I guess if we didn't have them, you could find that they just picked a random option or what they thought was the best option. And it gives us the opportunity to see those and then reach out to them, get some clarification, and then progress it from there. Okay, just putting in the amount that I'd like to invest. And that will then take us to the ethical overlay stage that I was referencing before. And so you can see the preset ethical categories we have. Obviously, what's really important in ethical, and I think this was really touched on earlier in the week, was that there are a lot of ethical options out there. And so what we are trying to do with this is create, one, the ability to personalize it, but two, it's attempt to simplify it as well. And so I think part of that is what's really important is that you can understand what it's doing, because no arms, worst offenders, it seems pretty clear, but I think you, as someone who's giving the product, you want to understand absolutely what it is. And so we have these question marks. You can hover over them to get the definition, but there is also a web page that we have that goes into a lot more depth in terms of the sources that we're using. Wherever possible, we try to use external sources rather than make internal judgments ourselves. And if we are, we try to be really clear about what the metrics are, so you know exactly what you're getting. So I guess one of the examples of external source we use is in no animal testing. We'll use PETA for that. And the other thing I'd highlight from this is that in a lot of the categories, we have two levels. So there's any or the worst offenders. And so it really comes to, is a little bit okay for the client, or absolutely none whatsoever. So I'll tick a few of them, because then it will show us the portfolio, or the expected portfolio, and it will also give us a description or a list of the securities that are being excluded because of the selection here. The other thing you may have noticed is we have these asset class and thematic options. And so you can tailor the portfolio outside of ethics. And it's very, very easy, the way the system has been structured, to add further screens to it, either at a fund level or a firm level, or at a individual investor level. One of them that we see quite often in the thematic space is both these no Australian banks and limit to Australian housing exposure. So, we might have customers that have quite significant physical property assets, and so in Australia, and they don't want to have any more of that in their nucleus wealth portfolio. So we see that get used quite a lot. I'll click those. Okay, so this is the initial review page, and it's going to give us the responses to the questions, the ethical overlays we've chosen as well. But I think what I'll highlight here is that you can see that in this instance, given the answers to the question, it's blended the tactical portfolios. As I think I mentioned earlier, they have been specifically designed for this purpose to be blended, which gives you obviously a lot of different combinations of risk profiles. And then obviously something that's going to be really important is going to be what is the strategic asset allocation of this portfolio. So where is it most of the time when it's not above or below because of tactical management. And so in this case, we can see that it's 76% of our assets are in growth producing assets at the moment. We then can roll down and we can see that given that combination, this is what the portfolio would currently look like. And these are dollars we'd have invested. And we can keep going and we can see the list of securities that have been excluded because of the screens that we have put on. So for Nucleus Wealth, one of, I guess, our cultural pillars really is transparency and bringing that to the market. And I think, that's really important when you have a value proposition of this idea of putting other assets around it, is that people know what is in there. So we've tried to be very clear about what's in there and what's not. Fees as well, tried to make them as clear and as simple as possible. And then I think the last thing I will, or maybe two more things I'll highlight, I'm conscious of time, is we do our ID checks, AML, and counter-terrorism funding checks through Green ID. And it's very simple. The client does it all themselves. I think I have one already filled out here. Save some time. No, apologies. Okay, so in this case, to do the verification, I would fill in the account details. And then it would bring up the Green ID screen, which I would then fill out, and I can use license. Sorry, I can use license, passport, or Medicare number. And then, sorry, the final thing I will show you is the statement of advice. So as I said earlier in the session, this can be customized according to what your standard statement of advice is, or what would be appropriate for you if you were to use a system. Okay, conscious of time. So let me just go back to... Oh, sorry. As I mentioned, I won't go into any more detail though, is we do the client administration on Proton portal as well, sorry, and Proton, and the funds management as well. So, we can see a number of use cases potentially for a firm to use this as a tool. I think for me, I won't dwell on it, but I will mention that, earlier in the week we saw, and I think everyone knows about this idea of the wealth transfer that's coming. And we saw that at current rates, upwards of 70% of people who are inheriting money are not going to the financial advisor that their parents or grandparents had that money with. And so I think that this is a tool that can potentially be used to engage with, younger generations of clients, children or grandchildren that don't need full advice, and a tool that can be used to create a relationship there that can then be built on in future. So I think I'd like to finish there. Peter, I will call you back in.
All right. Thanks, Shelley. We do have a couple of questions, if you don't mind. I'll
Please
get straight into them. So can you actually set the portfolios at an advisor practice level in terms of how you build the system?
So the system's currently built to run on the Nucleus Wealth portfolios, but certainly does have the ability to do that.
Okay, Great. And can you just tell us a bit about, in our experience, advisors love white labeling things, particularly larger businesses. So do you support that, and what's the process?
Absolutely. So we already have a number of financial advice firms that have white labeled the portal here, and so it's really very similar to what everything that I've shown you, except that you choose the colors and you choose the branding, and then you have a link on your website, or you can have it on your website, or you can just supply it directly to the clients that you want to use it. And we have tried to design it so it is as seamless a feeling of them moving from one environment to another, so they feel like they're staying with you.
Okay, cool.
It's very easy to do though, and it depends on the amount of customization you want to do and what you've just seen. But to add your branding colors to what I have just shown is very, very easy to do and offer.
Okay, great. And there has been a bit of a theme this week around the ethical investing space. Can you just expand a little bit on what, sort of what the difference is between the standard ethical models people are using and the Nucleus one specifically that you showed us?
Yeah, absolutely. So, the Nucleus one is designed to allow each individual client to choose which ethics they want to apply to their portfolio. And it is designed to be able to do it in a scalable way. I was actually speaking to an advisor this week who said he had really been struggling to engage with clients on the ethical space because they were so personal in what they did and didn't want. And in order to try and service that, he therefore needed so much product awareness knowledge. But this he's actually found as a great tool to use with them. We actually have an ethical calculator he uses. It's just a tool on the website, and he sits down with clients and goes through that. It's exactly the same as it's in the portal, and so he can select them, and then they can have a discussion about what that would mean, what that would look like, and it just allows him to do more personalization for his clients.
Okay. Yeah, it's a whole new rabbit hole for advisors to go down.
Absolutely.
Ethical investing. Yeah.
Absolutely.
Yeah. Okay. Just a question around the sort of the ongoing support model for these low touch clients and advisors. So how's that relationship supported from a Nucleus perspective? How do you think about it?
So from a Nucleus perspective, for us, we want to basically, it's sort of a marketing trope, but meet the client where they need to be. And we have quite a significant range of clients in terms of their needs of touch. So some of them, they don't want to talk to us. They want to just do all their administration through the system. Maybe they'll send us an email once a year if they need something. Others of them want to actually be on the phone with us, maybe a couple of times a year, and it can just be an update. So it really does, range across in that spectrum. In terms of advisors, so they're using it in a number of different ways, the tool. One of them, they're using it basically, they want to, for their investment advice, it's all of their investment advice clients goes down this route, but they still have a face-to-face one-on-one with their clients.
Okay.
So I think it could be used in a number of different ways.
Yep. And do you support sort of super funds, self-managed funds? Yep.
Yeah, absolutely. So
yep.
It's really interesting the experience we've had within superannuation. So we do personal super as well as SMSFs, and because of the amount of personalization that we've been able to offer, we've actually seen clients shut down their SMSFs and move to personal super. They get the savings and the administration savings from that. So it has been a really interesting experience in that space.
Okay, great. Well, that's been really interesting, Shelley. Thanks so much for taking us through that. Again, congratulations on the award. And I think that's a great working example of technology offering mass personalization at scale. So I'm sure we'll hear more to come.
Thanks very much, Peter.
From Nucleus in the future. Thanks, Shelley. So I'll head to our next speaker. We have Daniel Bauer, who's head of platforms from ThinkClear. Daniel's also pretty good at updating us on cricket scores, and might give us a quick update, although I've assured him if anyone's really interested in the cricket, you probably have that open on your screens in front of you anyway. Welcome, Daniel. FinClear, obviously, we heard a little bit from FinClear earlier in the week and the ASX, and we really thought that it was well worth expanding on the whole idea of how using HINs can provide an alternative model to traditional custody. So Daniel's definitely the best guy to take us through that idea. So welcome, Daniel.
Thank you very much, Pete, and very much Rory Burns just survived the big appeal. So actually, that could have been quite interesting. He's having a tough innings up there at the Gabba. But thank you very much to Toby and everybody for an allocation of time today, and especially appreciative to everyone on the call, because I do know that you're extremely busy this time of year. So we do appreciate your time, and hopefully can provide some content in and around to sort of make some of your choices or education a little bit broader. Earlier this week, we had the opportunity to introduce the ASX, and indirectly is a key stakeholder to all the participants on this call today. And what they were able to communicate is the future state of where they're going with their platform. And obviously with their platform, one of the big upgrades is the CHESS movement to a distributed ledger system. And then more importantly, if we sort of take a step back of what that means on a world scale, I actually think, from our primary exchange, it's a world-leading sort of feat that we all should be appreciative of. Interestingly, on that call, we sort of presented a couple of use cases where the registry system of the CHESS system can sort of broadly be expanded into adjacent sort of use cases. So we looked at superannuation, and we looked at a few other bits and pieces in and around sort of the advisor portal and also App Center. But what was also interesting is the way that you could sort of build out the ASX Symphony platform to include cases around providence. And we looked at the KPMG building code for flammable materials, which is really quite interesting. So we just wanted to take that a bit further and come back a bit as well, because that's the future state of where we're going. And so what we wanted to really do today was look at sort of, even though we know where the future's like, how do we get there, and what's the current state of sort of operating models for platforms today. Currently, in sort of the platform operating space, we've got two types of models. We've got the custodian model, and we've got a more HIN-based model as well. So as you can see up here on the top of your screen, under this custodial model, you can see the advisor interacts with their traditional wrap platform here today. And what they do is they go into an order pad along with sort of all the other sort of dealer groups and advisors that are in and around on that platform distribution. The orders are aggregated at the end at a particular time point during the day, and those aggregated orders are then sent into an executing broker, or they're sent to a panel of brokers. The executing broker will receive that one aggregated or bunched order. It would then maybe drop it onto a VWAP or an algo, let that order run throughout the course of the day. At the end of that day, they will then sort of send their orders into a custodian, and all but one of the large custodians in the Australian marketplace is an international bank, and not all those international banks have all the respective licenses to perform the services under the ASX. So that custodian will then farm its obligations out to a sub-custodian, which will then on the T+2 basis look to settle those particular trades. And what you can see from this custodian model is a highly sequential, tightly coupled order flow, where you have a significant amount of distance between the advisor and the actual custodian of the trades, which is the ASX. And so what we'd like to do is present an alternative in and around the HIN structure, which is this alternative model where you actually have an advisor and you have a HIN-based or ASX registered participant who is sitting much closer to the exchange. And as the changes that are coming through from the ASX and some of the macro profiles, which we'll go through in a second, what we can see is that overall is that what we'd like to see is less intermediaries involved in the transmission of trades and execution. Will reduce operational risk, will reduce counterparty risk. It will hopefully reduce the cost for our end clients and satisfy some of the best execution, best interest tests, and also delivers a clear title and ownership to those assets. And you might be asking yourself, well, why does it matter? And the question is, when you have a very tightly coupled, rigid operating model, you may not be able to experience the sort of the transformative technological disruption that we're seeing across the industry. Because even though the ASX did present to us what is happening with the CHESS replacement, I think we can all agree that CHESS replacement is one of a myriad or a confluence of factors that are affecting us as stakeholders in the financial market space. I mean, just yesterday, the Treasurer, Josh Frydenberg, presented that payments are going to be under the biggest change and reform in the last quarter century. Earlier in September, we looked at the new payments platform. We looked at BPay and FPOS coming together to form the Australian Payments Plus platform, which will drive a single real-time payment processing center on a 24/7, 365 basis. Now, as you get towards the custodial model and you have lots of participants within that structure, are you able to realize all the benefits of that payments technology? We all know that cloud technology and infrastructure is coming very much to us at a rate of knots. A lot of participants now are sitting on the infinite power of Google, Amazon, and AWS, where we can dial up servers and really deliver some of that non-batch processing capability, rent service per second to really deliver sort of infrastructure gains. That's very different to when certainly I started my journey in the wealth space, where we had a server on level 4 in a refrigerated room that ran reports overnight when the servers were sort of at less capacity. So the question marker remains is, with all those participants in the chain, you're really held to the weakness of the operational or technology infrastructure of that weakest participant. So do you get to realize some of the benefits of having that cloud infrastructure? And it remains to be seen. The ASX presented to us that sort of the change in market microstructure, which is the distributed ledger technology. And so what we're seeing is that with the traditional layers being removed from the ASX, and we can see the capability around the peer-to-peer, we can see direct connectivity with the ledger system and the interaction. Are we able to realize the true benefits of that through a custodial structure? Whereas if you're sitting at the unique atomic level of the portfolio being the HIN, you might be able to generate greater operational efficiency, greater practice efficiency, and greater ROI. What we're also seeing across the listed space in particular, and we saw this with the Airlie fund from the Magellan stable, is we're seeing that unlisted and listed products coming together in a kind of omnibus distribution channel, but under a single pricing structure. So we're seeing a lot of innovation come through the listed space. We're not seeing that same innovation from the managed fund space, which is really a 1970s product still listing 50 years ago and still operating today. So the HIN is starting to drive a lot of product manufacture and a lot of innovation that we can all be the benefit of. As the summer of sport takes hold in Australia, I'm sort of reminded of a very famous saying here from Kerry Packer about tax minimisation. And why I think it's important is because tax minimisation in Australia could be classified as sport in and of itself. And the people that come to FinClear to talk about the HIN, the benefits of the HIN model, are those advisors looking to deliver after-tax returns. And the after-tax return really drives or enhances the advisor value prop. We know that if you can get significant uplift on a compounding factor by looking at utilising the efficiencies in various tax structures, which over time can really empower and deliver some optimal wealth solutions for advisors and their clients. So it really does drive and enhance the value prop of the advisor. So what are the benefits of HIN? One of the slides that I've had the pleasure of talking about over the last week is the concept of being familiar with the HIN concept. The ASX presented that it was to us in sort of an interesting slide that there was 20 million active shareholders on HIN across 3 million active HINs. And Australians are inherently familiar with the HIN structure because when they begin their wealth journey, they begin with a HIN. They normally begin with buying a stock. And so in terms of where we are as in the intermediary space, time is our critical asset. So the less time that we can spend on education, the less time we can improve client education retention, we might be able to deliver and improve the client ROI and practice profitability. We know that the HIN delivers full legal and beneficial ownership. This is not sort of the structure that you'll see within a custodial environment where you enjoy beneficial ownership, absolutely, but you don't have the complete transparency of where my stock is. I mentioned tax efficiency, and what we see from the people who really come to FinClear to look for our solution is the HIN and the stock is the most atomic level of the listed portfolio structure. So the optimization around that really sits at the level of the franking credits, withholding tax, and all those gains we really harness and can and take on a real-time basis. One of the interesting stats that the custodial environment sees that not a lot of people are aware of is what's actually going on at the custodial level. Sometimes, and not all the time, I'll stress, that the custodian can utilize a stock lending practice where overnight your assets are lent out by the custodian. Now, that's to improve their margins. Custodians actually work on very thin margins. And if you look at it's a size or a scale play. So if you look at some of the biggest custodians in the world where they've got tens of trillions of dollars under assets, the way that they get their improvement is by lending their stock out overnight to other investment professionals and trading strategies. The HIN is portable. It's yours. It's the advised client's own HIN. It's not for anybody else. And so that gives you complete portability around the wealth journey. So if you want to move into a model portfolio, if you want to move out of a model portfolio, if you want to go into a trading account that sits outside it, you've got a lot more optionality in and around what you can do with the HIN-based structure. And I think what we can all talk about is one of the big themes that we've heard through this week is personalization, and how do we get out of product selling into delivering personal wealth solutions. The HIN, there's nothing more personal than the HIN. And so when we start putting the HIN around some customer-centric solutions, we do have the ability to implement that personalized goal-based approach and really enhance the value prop of all the stakeholders around the meeting today. So just sort of briefly finishing up here, the FinClear managed account portfolio, it's HIN-based. And I just wanted to point out that what we have is we run a zero brokerage platform, which really helps optimize and run efficient platforms on a HIN basis for account sizes for varying different account sizes. So I think I'm right on about time, so I'll leave it there and hand over to you, Pete.
Thanks, Daniel. Great information in a quick period of time. A couple of questions just popped through just around, we have an industry, particularly in holistic retail financial advice. It's basically been built around platforms and data integration with platforms. And I guess, how do you sort of see things working from an operational efficiency, moving clients onto individual HINs versus the traditional model of pooled assets at the moment? I mean, have you had discussions with them about advisors about how it changes things for them in that world?
There is a lot of concern around the operations and the efficiency that previously the custodial model offered, but technology has come so far that from what we can deliver and the utilization of technology really enables us to sort of overcome a lot of those barriers. But there is a journey. As I sort of mentioned early on, people start with HIN, and then there's an education to go into custody, and then we sort of take them back out of HIN. So people are definitely aware about it, and it's more of a question of, well, who's the custodian? What do they do with it? Why do I have to give my assets over to somebody else? That's the bigger concern rather than some of the operational considerations, which we can start to solve now. Yeah,
okay. Yeah, I think, and that's probably a good thing for us to think about into next year is, the pace of innovation, particularly in this area, is moving so fast that perhaps the broader ecosystem of things that support advisors is really keeping up, and that's going to be really important for the future. I'm sure FinClear have thoughts on that.
Yeah, it's a state of change for all of us, right? It's quite an exciting period to be involved, with opportunity abounds, but a couple of sleepless nights in between.
Okay. All right, Daniel, that's excellent. Thanks very much. We'll let you get back to the cricket. And thanks again to FinClear for all their support of the conference this week.
Really appreciate it. Congratulations. And to everyone, have a safe and Merry Christmas. It's been a tough year, so we look forward to resuming conversations next year. Take care.
Yeah. Okay. Thanks, everyone. So with the time we have remaining, myself and Toby Potter, we're going to have a bit of a chat about some of the things that Toby's been hiding behind the camera there this week, observing, and we had a chat last night about some of the things we've been hearing at this conference. So I think, particularly at the end of the year, it's a good opportunity to regroup some of the thoughts and perhaps, Toby, think about how these themes will play out 2022 and onwards.
Yeah, no, look, Peter, thank you very much for the job you've done over the last 5 days. It's not easy in moderating these, particularly with the variety of presenters that we've had. One of the things that has struck me about the presenters that we've had has been we've had a range of presenters from Nucleus today. They are a fintech, they are a small business. Through FinClear, which, as we saw from Erica, is becoming a larger business, through to Morningstars and the SS&Cs, the globals. It's this range of providers that interests me, all of whom have something to input to the technology process. What have been the main takeouts for you, Pete?
I think, a similar vein. The sense that wealth management in Australia has such strong winds at its back, in terms of the embedded growth that we've got just through the superannuation system. We're now seeing younger Australians who maybe unfortunately don't see property ownership as their future, but are now looking for other investment strategies, and that's playing out at the moment. And we have this weird issue where we have such a wonderful growth trajectory in our system, but a shrinking advisor pool, and by all accounts, that trend isn't forecast to change for at least 5 years. So it's certainly no shock that the technology providers and asset managers and platform providers and everyone involved is sort of thinking really carefully about not so much even just how do we win customers and retaining customers. I think it's more around servicing customers. I think they've realised that if the advisors are not there at the scale they thought they would be, that there's got to be some gap in the middle. But at the same time, what everyone agrees on the industry is that there's still ultimately going to be an advisor as a gatekeeper in most relationships in different ways. And I think what we haven't seen and what we're starting to see green shoots of is a lot of the technology investment in our industry is being pretty compliance driven ultimately, particularly in the superannuation system, that just change after change after change. And it's only now we're really starting to see real investment on client experience, personalization, probably in the last few years is happening. I think that's a really exciting thing that I've seen.
Yeah, superannuation seems to me to be just like the Aussie rules of the financial technology world. We are the world champions of super because nobody else does it. The shirt, by the way, Andy, is by special request. It seems to me that you touched on complexity, and that is the hallmark of what advisors face into. We operate in, I came from New Zealand 20-something years ago, 25 years ago, to find this kind of burgeoning advice industry here. And I'd worked in advice in New Zealand. It was a much, much, much smaller thing. And it remains much smaller because, it isn't as complex. There's no stamp duty, there's no capital gains tax, income tax is much more straightforward, and there certainly is no superannuation complexity. Whereas here, individual investors find themselves facing into a very complex environment, particularly as they arrive at retirement at a time when they also have money. We saw the ASX say, well, now we've got 20 million HINs. Well, if you think that you had a slide, Pete, which said, look, about 10,000 advisors. And if you think that each advisor could support 100, maybe 200 clients, that gets you to 1 million or 2 million clients. Well, the other 18 million are people who've got a HIN, are having a go themselves. So the demand for advice is just enormous, and the potential for the advice market to expand is enormous. But what we've seen, I think, is only with a technology-based solution will advice become something which is anything other than the preserve of the rich. I mean, advice must be a wonderful business to be in, despite its complexity, because it's going to be an undersupplied, over-demanded market. And one of the other things which I took out of the sessions is the central role of data. Whose data is it? Where's it located? How available is it? Who wants to have access to it? How can it be used to run a business? How can it be transferred between parties? I don't know if you've got thoughts on that. It came for me out of your presentation.
Yeah, I think we've been doing a lot of research into other sectors, other markets, and how these big, obviously some of these big cloud companies are thinking about data at the moment. And there is a real, there's sort of an evolving thinking that, well, ultimately it's the consumer's data, and they're just permissioning us to access it and use it, share it to provide services. And there's a whole bunch of views as to which companies are doing that well from a Silicon Valley perspective, and which are probably not doing it so well. But there's obviously that trust element with data. But I think as an industry, if I think about some of the businesses that have been successful in the late 90s through the 2000s and onwards, they've probably sort of come to the view that data is a moat around our business model, in the sense that if we are a controller, aggregator of data, then we can, build all these other services. It stops people from leaving us. It's all those sort of things. And I just think in 2021, that mindset's probably not the right one, because I think number one, consumers are better educated. They know it's their data. Advisors are really, I guess, probably one of the number one bits of frustration they get is on how we share data as an industry. So I think the thing for me is that it's not about who's going to win or lose in this market, because the embedded fundamentals are so good. Everyone should actually win if we execute well. The real risk is if you don't use that data capability for good. And by good, I mean by building great products and services and innovating and sharing with counterparties and all those things, then you probably could be left behind, because I just don't think advisors and consumers are going to put up with that.
I think the other thing is, I deal with a lot of, in both IMAP and my other life at Philo, I deal with a lot of industry providers of one sort or another. And the model which says, okay, well, we're a closed universe. We are, we own the data. We'll manage its delivery to advisors and clients in a way that suits us. That that is still resident in a number of organisations, but that is just not a sustainable view of how service providers are going to service advice professionals. I guess the other thing which is sort of really seems significant to me, though, is as advice businesses shrink, as the data management capability of the banks leaves the advice industry, you end up with a lot of small, much smaller licensees who probably struggle to have the resources or expertise to manage that data. So, that's your area of expertise, and I'd be interested to, in your thoughts on how smaller organisations are going to be able to kind of manage the data management process.
I mean, it's here and now for some of the licensees, even some of the larger licensees in the mid-tier space. I mean, they now have ASIC obligations to share data, based on authorised reps moving licensees, and there's all sorts of requirements now. So that's driven that a lot. I think there's definitely systems and there's capability. And a lot of businesses are sitting on pools of data that don't necessarily talk to each other. So there's got to be some thinking around how that get consolidated. And I would say there are definitely some businesses that are more progressed on thinking about these things. What they're not more progressed on is all the various use cases and where they want to head with it, and what they want to use that data for. From a capability perspective, there's certainly we talk to our friends that operate in the compliance space particularly, and they're sort of saying, well, what they think we need to see in our industry is a lot more standardization across licensees. So we seem to have a lot of licensees doing the same things repetitively across the industry, and maybe just in slightly different ways, but that creates a lot of complexity. I think, honestly, if we found better ways to standardize a lot of things across our sector, that would actually free up capability to really invest more on core data infrastructure, the right people. And so we don't end up with an advice world that's really dominated by spending on compliance related activities, and you're spending more money on data and product and advice driven things. And that's got to be the big shift. We have a massive skills gap in our sector on this issue.
Yeah, well, you know, you've got a skills gap when even Coles turn around and say, hey, never mind about putting sugar on shelves for $1. Our key challenge is getting people who can cut code.
And I think that's the enormous opportunity. Is what's exciting is we are seeing, you know, these global players come into our market, and they've got that capability. They've done it in much bigger markets. What they don't have is local expertise, and that's probably where I think we're gonna see a lot more partnerships between local players.
I want to look in the time we've got left. I really want to touch on that because we've got a few really significant success stories in Australia. I mean, the ones that immediately come to mind are the ASX, Iris, the listed platforms. You know, they are businesses that have grown successfully in the financial services space. But you mentioned AWS, Google, and Morningstar in your Microsoft in your presentation. We've had Morningstar and SS&C. I mean, these are global companies. And we're already starting to see a number of others arrive, the Invest Clouds of this world. So how do you think this, is this going to be a contest between, the megas who treat our 25 million rich people as being kind of a niche market as they target Asia? Or is there a real place for sort of best of breed, locally produced, homegrown specialist?
Look, I think from a cloud perspective, there will be a huge battle in financial services, cloud-related activities, not just wealth management, because they want banking, they want the superannuation funds. There's a whole play there for them. And you've got to remember too, a lot of these big global tech companies are in the wellness space now as well. They're in health and wellness, so they sort of see this as an area. What I would say though is that particularly Google, I mean, they're all partners with these big ASX companies. They're major companies. So I don't think they want to be at the coalface. I think they just want to enable the local partners to build better technology on their platforms. Ideally, is probably where the game will be played. I genuinely think that there's little risk of them being like a little risk of Amazon building an investment wrap service, for example, in Australia, because simply it's too regulated. These companies are global, unregulated monopolies, effectively, that are bigger than most governments. And I just don't think they see. I just think they've no desire to go into highly regulated places like Australian financial services. So I think it'll be partnerships, and I think what will be really interesting to see is who partners with who.
Right. Well, on that note, Peter, thank you very much for your work through this week and in all the preparation that goes into these sessions. To our presenters and to those of you who've attended, there've been a lot of you. 750 or 800 people have participated in the sessions that we've held, and it's been a pleasure for us to bring what, to my mind, is one of the really central areas of development for managed accounts to you this week. Next week, as Peter said, we're running an aligned webinar series on getting the benefits of disruption into portfolios. We're going to focus on blockchain on Mondays. We've got a very interesting session on Wednesday on the use of artificial intelligence in portfolio management, and then on Friday we're going to be talking about the ways in which these new investment opportunities and these new technology processes are transforming portfolio management. After that, we'll wipe the sweat from our brow, breathe a sigh of relief, and head off to Christmas. So if we see you next week, I'm looking forward to that. If we don't, everybody have a great Christmas. We've all earned our month-long break this year, and we'll look forward to seeing you in 2022. Pete, thanks very much.
Thanks, Tom.
And to all of you, thanks for attending.